plan to start investing your money, the biggest question almost everyone faces is whether you should put all your money at once or keep adding it slowly at different intervals. When you put your money all at once, it's called investing in lump sum. And when you decide to distribute the money you have and invest at different intervals, it's called a systematic investment plan, or popularly known as SIP. Now, before deciding which method is the best, let me explain what exactly does SIP and lump sum mean. Hi everyone, this is CA Shrishti, and in today's video we are going to compare SIPs and lump sum investments. SIP is systematic investment plan. जिसमें you invest a certain amount in regular time intervals. It can be quarterly, monthly and even weekly. For example, let's assume you have rupees 5 lakhs to invest. Now if you decide to start a rupees 20,000 monthly SIP, that means that every month you will now invest a fixed amount of rupees 20,000. On the other hand, if you decide to invest the entire rupees 5 lakhs all at once, that's called a lump sum investment. Now, let's see which way is better. The truth is, there is no fixed answer to which method of investing is better. It's extremely relative and depends on few factors. For most people, SIP may be better because here you are investing a certain amount, let's say every month. It doesn't matter if the market goes up or down. Let's assume you start your SIP when the market is at an all-time high and the market starts falling or correcting after that. You won't have to worry because your SIP will also continue when the market falls, जिससे आपका average buy price will keep reducing. You will get more stocks or more units at the same price. To make this easier, let's check the stock prices of an Indian multinational automotive company. Let's assume you started investing in 2019 April. In this case, your buying price would have been at around rupees 200. Then in just 1 year, the stock went down by 60-70%. Now, if you would have invested all at once, your average buying price would have remained at rupees 200. Versus if you would have done a monthly SIP, your average buying price would have been at around rupees 130 because your SIP would have been active. Even during the months the price was falling. Now, I am not saying that doing an SIP is better than lump sum in every scenario, because if you would have done a lump sum investment at the bottom when the stock X was at its lowest of rupees 63, then obviously you would have made higher returns. But can you really predict the exact bottom of a market or a particular stock is the real question. Because if you are able to invest when the market is at its bottom, then obviously you will make most returns in investing. Hence, the best method may be a combination of both SIP and lump sum, or it may vary from individual to individual. Matlab, start and continue your SIP every month and also increase their SIP amount every year by around 10% as your income grows. But whenever there is a massive fall in the market due to external reasons like COVID, fear created because of any war, or like the crash we saw on the election day on June 5. In such days, when you know the market has fallen a lot, you can simply make a lump sum investment at lower prices to gain from the uptrend. This way, you won't have to worry about continuous market movement happening every month or every day, because no matter what happens, money is automatically directed from your bank account for the SIP. But whenever there is a massive opportunity in the market, then you can make a lump sum investment and also benefit from that opportunity. I hope this helps. You can comment below if you have any questions.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.